Good morning. Happy Wednesday, August 6th. We are going to do our kind of weekly updates a bit different. No more infographics. We will kind of start off with a little bit of data and then go over into a particular asset. This week we have urgent cares. We've got the 10-year treasury about 4.22 to start off today. You're looking at some of the bonds here. All this can be found on the website, at our website at Data Trends. But you've got the SP 500s, sitting just under 6,300. Um, you've got Bitcoin. It's kind of taken a hit the past week at around 114,200 bucks. It's still year over year, it's crushing it as well. I find that you kind of have to talk about Bitcoin these days because of just so much chatter, and everyone wants to compare it. So we will kind of highlight its values here. Um, Anything else? You've got the REITs. Year over year, healthcare is up at 325.88, and the retail REITs are a bit down year over year, barely. So it's kind of flat, right? So you haven't done too great year over year on the retail REITs. Moving over to some of the data for urgent cares, you've got about 88 on the market. Um, that change is roughly 14% increase from a month ago. These are all just single tenant. Now, this isn't exact. This is just what we're tracking, but you still have about a 14.29% increase in inventory month over month, which isn't great, all things considered. From a quarter ago, you've got, you know, I think you're up 18, almost 19% quarter over quarter. So you're not seeing a whole lot of movement there, in my opinion. You've got the median cap rate still sitting at a 6.5, right? That's kind of where we're sitting on the asking cap rate, with the 25th percentile at a 6, and the top 75th percentile being at around a 7 cap. I think this is going to be really market dependent on where it's located. Obviously, this data is looking at the entirety of the U.S. And so it's not going to reflect, if you're in the Dallas market or the Nashville market or the Atlanta market versus, North Dakota or Kansas or something like that. Oh, you're still looking at price per square foot. The median's at 629. I think that's pretty high, and we all know why. Cost of material, labor, and dirt just very high right now. It's kind of mind-boggling how high new construction's gotten. Uh, the days on the market, the median's 542. That's kind of been counted just by 14. That seems about right. I think there's a lot of inventory on the market. It reflects that. That's a month over month change of 3.63%. And I think that seems to be flat, quarter over quarter. So that doesn't seem to be changing a whole lot. Um, and then listings sold today. We're tracking 10. I think there's a discrepancy here with this number, so I'm going to dig into it. But all in all, kind of the same, over the last several months. You're getting not a lot of transactions in the space. If your assets in a good market, it will probably sell. But you're looking at these cap rates right here. Right? It'll be somewhere in here is probably where it's going to trade. And obviously that's dependent on terms, the lease, remaining lease term, etc. So, in other news, just a quick little um, change of pace here. This was something I found interesting. No tax on capital gains for home sales. This is not relevant to us, CRE investors, brokers, developers. But it's worth noting. Um, I don't know how I feel about it. I think that, under the current law, you know, individuals can defer 250,000 or not be taxed on 250,000, while couples are at 500,000. That seems to be reasonable. I think this is a quick fix for the lagging residential market. I think that's what they're trying to throw out there, to kind of jumpstart the housing market, because it is in a slump. Um, so for me, I'm not so sure that this needs to be changed. I'm not a big fan of taxes as a whole, but I don't know if this is going to be the best thing to jumpstart home sales and the residential market. More on our side is just jobs. There's been a lot of talk about jobs the last week since our president, um, basically fired, the lady over, um, reporting the jobs. Look, at the end of the day, I mean, it's crystal clear that the retail industry announced 80,487 job cuts through July. That's a 249% surge compared to the same period last year. And then you've got all industries announced 806,383 job cuts so far this year. It's the highest year-to-date total since employers reduced their workforce by 1.85 million workers in 2020. Look, I mean, there's a lot to be said that there are a lot of people that think the economy is doing terrible. There's a lot of people that think the economy is doing fantastic. I kind of fall somewhere in the middle. I think the economy's doing well, and I think my hypothesis on what's going on in the jobs, numbers is really kind of a combination of a lot of things. You had government layoffs, you had, um, which impacted private employers as well. You've got AI, which a lot of large companies have proactively laid off a lot of their workforce, in preparation of AI. You have the story of Microsoft laying off a large percent of their workforce while reporting record profits. And then, of course, you have the the issues and some of the situation around tariffs and kind of those impacts, which I don't believe we've fully seen yet. But all in all, I don't think that the jobs numbers are that concerning, because I think just things are changing. We're at a moment, inflection point, where technology is changing, and it's going to impact the job market. So, and I think AI has a big part of what we're seeing there. So anyway, that's the report. Hopefully you'll like this format a little bit better. Let me know if you have any questions or if we can help in any way. Cheers.